After my last two videos on the basics and TFSA versus RRSP, a lot of you asked, I only have $50 or maybe $100 left after bills each month. Can I really start investing? And honestly, I get that question because that used to be me too. You pay rent on your mortgage, groceries are up again, gas isn't getting any cheaper. By the end of the month, you're thinking, there's not much left to work with here. But here's the truth that most people don't hear. Yes, you can absolutely start investing with $50 a month. And not only that, if you do it consistently, that small amount can actually grow into something meaningful over time. Today, I'm going to show you exactly how to do this, step by step, using real, simple strategies that work for everyday Canadians with a regular paycheck. Hey, welcome back to True North Income. I'm Mike, and on this channel, we talk about simple ways Canadians can build income, invest smarter, and create more freedom in life. And today's video is all about removing one of the biggest excuses that holds people back. I don't have enough money to invest. We're going to break that down together and show you how to start with as little as $50 a month so you can begin building real passive income and over time create the kind of flexibility where you're not stuck in the 9 to 5 forever. Maybe that means traveling more. Maybe it just means less stress about bills. Whatever that looks like for you. Quick disclaimer before we jump in. This is for education and entertainment only, not financial advice. Please consult a licensed advisor or tax professional for your specific situation. All numbers are current as of 2026. All right, let's get into it. Section 1, why $50 a month actually works. Let's start here because this is the mindset shift. A lot of us think, if I can't invest hundreds or thousands, what's the point? But investing isn't about big amounts. It's about consistency over time. This is where something called compound interest comes in. And I'll explain this super simply. Compound interest just means your money earns returns. And then those returns start earning returns too. So your money starts growing on top of itself. Here's a real world example. Let's say we invest $50 a month. That's about the cost of a couple takeout meals or a few subscriptions. We don't use that much. If we invest that $50 every month and it grows at an average of around 6 to 7% per year, over 25 to 30 years, that could turn into tens of thousands of dollars. Not because we did anything fancy, just because we stayed consistent. Action step. Take 5 minutes today and look at your monthly spending. Find one $50 expense you could redirect, even temporarily. Section 2, Step 1. Open the right account. TFSA first. Now that we understand why this works, let's talk about where to invest. For most beginners in Canada, the best place to start is a TFSA, a tax-free savings account. And despite the name, it's not just for savings. You can invest inside a TFSA, and here's the big benefit. Any growth you make is completely tax-free. So if your investments grow over time, you don't pay tax on those gains when you withdraw. That's a huge advantage. Now in 2026, there's a new contribution limit of $7,000, plus any unused room from previous years. So if you've never contributed before, you might actually have quite a bit of room available. The easiest way to check your exact contribution room is through your CRA My account. Action step. Log into your CRA account this week and check your TFSA contribution room so you know exactly how much you can invest safely. Step 2. Choose simple investments. Alright, this is where people usually get overwhelmed. Stocks, crypto, options, it can feel like a lot. But here's the good news. We don't need to make this complicated. For beginners, one of the simplest and safest ways to invest is through low-cost index funds or all-in-one ETFs. Now let's break that down. An ETF, exchange-traded fund, is basically a basket of investments. So instead of trying to pick one company and hope it does well, you're buying a little piece of hundreds or even thousands of companies at once. So if one company struggles, it doesn't ruin your whole investment. This is what people mean when they say don't put all your eggs in one basket. These broad market ETFs just follow the overall market. No guessing, no picking winners. Action step. When you open your investment account, look for a simple, broad market ETF option. Start with one, keep it simple. Step 3. Automate your contributions. Now this might be the most important step of all, because even if we know what to do, life gets busy. Bills come up, unexpected expenses happen. So instead of relying on willpower, we use a system. Set up an automatic contribution of $50 per month. That way, the money gets invested before we have a chance to spend it. Think of it like another bill, but this one is for your future. And the beauty of this, you don't have to think about it. It just happens in the background. Even in months where things feel tight, you're still making progress. Action step. Set up an automatic transfer from your bank account into your TFSA investment account, even if it's just $50. Section 5. Common beginner mistakes to avoid. Alright, before we wrap up the strategy, let's talk about a few mistakes we want to avoid, because these can slow things down or even cost us money. Mistake number 1, trying to time the market. This is when people try to guess when prices are going up or down. Even professionals struggle with this. Instead, we focus on consistency, investing regularly over time. Mistake number 2, high fee funds. Some funds charge higher fees, which quietly eat into your returns over the years. That's why we stick with low-cost options. Mistake number 3, panic selling. Markets go up and sometimes they go down. That's normal. But selling when things dip locks in losses. Long-term investors stay calm and keep investing. And there's one more thing. If money feels tight in some months, that's okay. You can always lower your contribution temporarily or pause and restart later. This is not about being perfect. It's about staying consistent over time. Action step. Write down one rule for yourself. Something like, I invest every month and don't panic when markets dip. I'll be honest with you. I started investing exactly like this. Small amounts, every month, no fancy knowledge. At the beginning, it didn't feel like much, but over time, it started to build. And more importantly, it changed how I thought about money. This is how regular Canadians build what I like to call quiet wealth. Not flashy, not overnight, but steady, reliable, and powerful over time. And eventually, it gives you options. Maybe that's taking a trip without stressing about the cost. Maybe it's cutting back work hours. Or just having peace of mind knowing you're moving forward. If this video made investing feel doable for the first time, hit that like button and subscribe to True North Income for more simple step-by-step Canadian money tips every week. And I'd love to hear from you. What's the smallest amount you feel you could start investing each month? Drop it in the comments. I read every single one. And just a quick reminder before you go. This is for education and entertainment only, not financial advice. Always talk to a licensed advisor for your specific situation. Thanks for watching, and let's keep building our True North income together.